What's up, everybody? What's going on? Good to see you. Good to have you here at Stock Watch Sunday. Couldn't be happier to have you here this week. It's going to be an interesting week, and I can't wait to share my thoughts and opinions on how this week is going to turn out. But first, let me welcome you to my channel. My name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, and I've made it my mission to help you own it. So if you want to see more content, such as, how to trade in the stock market, how to go through your Thinkorswim, all your favorite platforms, how to just learn simple patterns and indicators that can help you become a better day trader, to help you, really get out of that 9-to-5 seat and get into taking charge of your own financial freedom, then, I know that was really long-winded, but then subscribe to this channel, because that is what this is all about. And if you are excited for to see the top 5 stocks that I'm watching through this week, give me a thumbs up. I certainly would appreciate it. Helps show support for this channel, and definitely something that I really would appreciate. So let me welcome some folks here. Let me see here, Alan. Excuse me, I still have a little bit of a cough this week. Alan, what's going on? Quick Fox, Hope, Bill, Bruce Thompson, good to see you. Joe, what's up? JCaz17, good to see you as always, brother. And Bob, what's going on? As I'm letting some more people roll in here, yes, Stock Watch Sunday, baby. Let me just, let you know what's going to be going on for this week. So before I get into the stocks that I'm watching, just kind of want to get you a heads up that, hey, the stock market, again, has another day that it will be closed this week. So it might be a little bit funky. So last week we saw the same thing where there was, some really low volume in certain parts of the week last week. And I think we see something similar this week. Really, after, New Year's is when it starts to really pick up and really ramp up. But nevertheless, there's still opportunities to make money this week. And I'm going to show you some stocks that I think are going to be a little bit more safer bets, a little bit, I don't want to say dry, but just some safer bets for you to kind of like hang your hat on in a market that you might not be so sure about. So, and if you guys would like, as a part of Stock Watch Sunday, if this is your first time being here, first of all, welcome. I'm happy to have you here. Second of all, after I go over the stocks that I'm watching, I would encourage you to share the ones that you would like me to take a look at, or the ones that you're watching, to see, if our opinions align, if there's something that makes sense to you. The only thing that I would ask is that you don't just throw out a ticker for me to try to decipher as to which way you're thinking. If you can give me some sort of insight on why you would like me to take a look at a particular ticker, why do you see value in it, so that we have a direction in which we can go into, I certainly would appreciate that. Just allows us to be a little bit more efficient, especially when there's so many stocks to go through usually during our Stock Watch Sundays. So what's going on, Andrew? Good to see you, man. At least the mic was on this time. Yeah, so if you guys weren't part of our Friday webinar, you definitely missed a great time. So if you guys aren't familiar with the platform that I built with my partner Jake, and I'll go ahead and share that with you actually right now, it is WeTrade HQ. And I'll go ahead and show you the first stock that I'm watching this week, which is Apple. But if you are not part of WeTrade HQ, you missed a great webinar that we had on Friday night, which was me along with our other 3 top mentors within WeTrade HQ. So if you're interested in learning how to trade in the stock market, we here at WeTrade HQ are firm believers that there's more than one way or more than one strategy that fits the needs of people who are looking to trade in the stock market. And so we've dedicated our focus to be cognizant of that, to understand that people learn in different ways. There's different ways to make money in the stock market. So, myself, I like to trade in the OTC penny stock market. I also like to trade big boards, as you guys can see here that I'm watching Apple for this week as well. But there's other folks that, specialize in options and futures and, all kinds of other things, long-term investing, so that no matter what you're trading in the stock market, that WeTrade HQ becomes the place for you. And so if you come here, and you don't have to take advantage of any of the mentorships, but that was just kind of what we provided, gave you some insight for people that, had a combined 40 years of trading experience, which it was really great. So if you were not part of that, it was probably because you're not part of WeTrade HQ, and it doesn't cost you anything to be a part of it. And so all you got to do is come to WeTrade HQ, create a free account. You can just log in, create a free account. You can even log in with your own Facebook account. All that's connected, and it's actually absolutely free. You don't have, it doesn't cost you anything. You don't have to be in a mentorship to have taken advantage of the webinar that we had on Friday. That's kind of the beauty of it. None of this costs you any money to use the WeTradeHQ platform. And what it is a community of over 3,000 people that get together and share their thoughts and ideas and successes and maybe some hard times. Maybe they're struggling getting it. And so everybody ends up helping each other out. And so that's what WeTradeHQ is about. And this is kind of what our bread and butter is. So what I did here is I went to their homepage at WeTradeHQ.com and just logged in, obviously, and went and searched my favorite tickers, the ones that I'm watching for this week. And the first one is Apple. So I went up here in the search bar, searched Apple, and this is what pops up. I obviously created these lines here, these trend lines and supports and resistances, but this is a integrated trading view chart, which is one of the top charting platforms that are out there. It's actually integrated within WeTradeHQ that you can use. You can also talk about Apple amongst all of your friends. You can see that there's a lot of people talking about Apple over the last couple of weeks. You can check out their financials, filings, and even news that comes up on WeTradeHQ anytime that a news article comes out or any kind of substantial news comes out on your favorite stock. It'll show up here as well. So again, all this is absolutely free for you to take advantage of. So I highly encourage you to do so. And that brings me to Apple. That's the one that I'm watching this week. I've been telling folks since the summertime, and part of me was like, I know that it's a bold prediction, but I really do feel that the way that the stock market is going, the way the economy is turning around, I shouldn't say turning around, but the way the economy was headed, that it really wouldn't surprise me to see Apple hit 300. And I was really kind of talking about this in the middle of the summertime. Now, a lot of you folks within, my own the Chaos crew, if you've been subscribed to this channel for a while and been hanging out here on Stock Watch Sundays, you know that I've been talking about Apple getting to 300 but before the end of the year. Here we are, December 29th, and it's at 289, had highs of over 290, 294 was the high, so I got pretty damn close, if I do say so myself. Now, we got 2 more days left of the stock market in being open in 2019, and so maybe we can get there. We'll see how this goes. But one important thing that I want you to kind of take note of is that Apple is just continuing on this trend. Now, this is the daily chart on Apple. You can make the argument that it could be overextended. And if you're just using and basing your, investing, decisions just on indicators and indicators alone, I would agree with you 100%. But one thing you need to really kind of understand is that this is still very much within a trend. And I tell a lot of folks within, my mentorship every morning that, and you can probably ask a lot of experienced traders, that the trend is your friend. That's one of those old sayings, that the trend's your friend. And until this breaks out of this trend, whether it breaks down or breaks out, it really, there's no reason to believe that no reason to really even look at any of your indicators, especially if you're looking to do long-term swings on this. This will actually be one of the stocks that I'll be watching throughout all of 2020, and just to kind of see where it goes, because really, in theory, Apple usually ends up following the S&P 500 very closely. If you look at the S&P 500, we can kind of take a look at that if you want to. We'll look at SPY, which is the ETF for the S&P 500. It follows it pretty clearly, or pretty closely. So if you look at SPY, with the exception of what was going on over the last day or so leading up to this, but it really does follow the S&P 500 pretty well. And so Apple just keeps chugging along here, and it looks really good. So what I would suggest for you guys, if you're looking to maybe trade Apple, get in on Apple, I would look at this and say, you know what? I think that I would wait for some sort of pullback if you're looking to invest in Apple. I wouldn't just be buying this right at the open or anything. You can look at futures right now. I was just looking at them before I went live with you guys. They are up slightly, so nothing crazy right now. Right before I came on, I just saw that there was some news that came out about, excuse me, about some, some issues. There was some sort of strike that went on over in the Middle East just before I went live with you guys, so that may impact gold futures as well. And actually, I didn't get a chance to check out gold futures, but we can take a look at that in a minute. I think that it's going to be interesting to see how the market plays out. So if that indeed happens, and if gold starts to go up, there's a good chance that perhaps the market may not know how to react. And if the market does start to make a little bit of a downturn, you could look for areas to hop in on Apple and look for potential support. So the first area of support I would look for is somewhere around this area here, around 272. Looks to be like a good spot to grab a dip and allow this to continue to run, as long as you see confirmation that this is bouncing off of this support level around 272. I think that would be a good spot to grab a nice position on Apple to see where it may end up going. So there you have it on Apple. Some people just don't want to make money. Yeah, I know, right? Afraid to learn something new. Yeah. So people are just commenting on our mentorship. Yeah. So the mentorship's a great place to be. There's a couple of folks, Shark, Alan, Blade Runner, plenty of other folks within our group that are in the mentorship in the morning, and it's been a great community to be a part of. I love those guys. They just love the community that they're in. So if you want to go check that out, the links are in the description. If you want to check that out, be happy to have you there. And so moving on to Tesla. Tesla has just been a freaking juggernaut. We go out to the daily chart here. You can kind of see that all this has done is just gone straight up. It gapped up back in October, and all it has done is just gone up and up and up. Had a little bit of a gap down. This is when the Cybertruck came out, and people didn't really respond to that very well. And then they came out with really positive earnings. And this Tesla's going to be one that I'm watching the entire month of January. So January 23rd, I believe, at the end of January, Tesla's going to be having earnings yet again. And one thing that I want to talk to you guys about is that Tesla is going to be a lot different now than it was in months past or even years past. Reason being is, and I think I touched on this last week, was because, and I took a little bit of a page out of Don's book, one of our mentors, and it brings up a very good point, that now that Tesla is profitable, this stock could continue to go much, much higher. And I think that that's definitely going to happen. And so all I've been doing with Tesla, it's been like taking candy from a baby, really. I mean, all I've been doing with Tesla over the last, I would say, 3 to 4 weeks is just buying the dip, selling at the top, and then buying the dip again. It's been textbook, super easy to trade, which is really not something you could have said in months or years past, because it's been extremely unpredictable, extremely unreliable as far as long-term swings are concerned. And again, looking at this chart here, if you go back to the daily, and you can see that it went up, to the 380s and kind of came back down. It just wasn't really reliable up in this area. But what I would say is, again, the difference between what happened when it came up to the 380s and then it just came crashing back down and then tried to retest it again, was that nowhere during this time were they actually profitable. And now they are. So this changes the game for Tesla. And I think that there's just going to be plenty of opportunities to buy the dips here. It's been consolidating very nicely last week. And again, I think a lot of that just has to do with the holiday. The stock market was closed one of these days. And then it's going to be closed again on Wednesday. So, what I do like is that it's holding very well on the 5-minute chart above 428. And so I'm going to be looking to potentially, add or get into, a new position on Tesla around 428. If it can't, you can obviously see that there's a really good support here around 425 as well. So if it can't hold support around 428, look for a nice little entry around 425. And if it can't hold that, obviously look for more supports to see if there's opportunities to get in. But what I would not do is short Tesla by any means. And I think there's probably going to be a lot of people that would tell you, oh, it's way overextended. This is super overblown. It's super overvalued. Why is it trading up this high? It's only a matter of time before you're going to be able to short this to the ground. And I would strongly disagree, because like I said, this is the first time that they've actually been profitable. And I'm really kind of curious to see how it turns, this month's earnings actually play out, because I think that will be surprised. I think they will be even more profitable. And I don't have, a whole lot to go off. I'm not saying that's going to be a 100% fact, but given the way that they've been trending as far as how they've been earning, gosh, it would be incredible if they had amazing earnings going into the, into the end of January. And this thing could easily, given the way that it's ran, could easily get to $500 before the end of this quarter. So at this point in time, it's kind of like if you talk, it's like Fight Club, right? The first rule in Fight Club is you don't talk about Fight Club. The first rule in Tesla is that you don't short Tesla. So that's how I would treat Tesla. Again, looking to buy in on these support levels around 428, 425, or if it doesn't even reach these support levels, again, looking for a breakout over previous high around 433. We did see a little bit of a smaller breakout here around 434. You can make the argument that you would want to wait till after it broke that 434 high, 434 high. But if you look here, it's touched that 433 several times, and just kind of waiting to be, for a long-term breakout up over 433. I think that, the risk reward there would probably be favorable if you're looking to get into a position right there at that 433 mark. So that's how I'm looking to play Tesla this week. It's been working out for the last several weeks. Tesla has been literally money when it comes to this trading. You could just trade it all day long. You could you could just make a living out of trading Tesla over the last, I would say, quarter, or over the last 3 months. It's just been really incredible. Hey, what's up, Lost One? Good to see you. Andrew says T looks interesting for long-term calls. Okay, yeah, sure. I'll take a look at that after I get through these last few stocks here. Yeah, so let's go ahead and move on. Hey, what's going on, Zishan? Good to see you. Glad to have you here. Happy that you are here. And we'll continue on to AMD. So AMD, if you guys aren't familiar with this one, I can't remember if this was on last week's Stock Watch Sunday or not. I believe it was. And all it's done is continued to go up since then as well. But AMD has been doing what we call a stair-stepper pattern. So it's pretty self-explanatory, but if you can kind of see here on the 30-minute chart that it really just kind of looks like a set of stairs, and it just keeps gapping up and gapping up. A lot of this has to do with the market. This is another one where I would say that it follows the market very closely, much like an Apple would. But it's a much lower price. It's not as high price as Apple. Apple's near $300 a share, and I was just sharing with you about how Tesla's over $400 a share. So this is the one that's a little bit cheaper, and would allow you to trade something if you're monitoring the market and you're seeing how the market's trending up, and you're seeing how Apple's trending up. This would be one that you could definitely play as it relates to how the overall market trades, because it follows it pretty closely. So, again, I can pull up, since we're done looking at Tesla, let's pull up SPY again and just kind of show you how this follows the market pretty closely. So we pull up SPY and we'll go to the daily chart on that one. Actually, we'll go to the daily chart on AMD just to kind of show you what I mean. So this is AMD on the daily chart. This is S&P 500 on the daily chart. As soon as I get there, there you go. Here's the S&P 500. Here's AMD. See, not exact. It's not a mirror image, but it is very, very close. So you can see that anytime it wants to take a dip here, and there, AMD pretty much follows it very closely. And, Apple's the same way. So we take out Apple. Again, see how these three charts, very similar to each other. Again, not exact, but they're very similar. And so, look, this is that huge dip right around a year ago. Same thing here, huge dip right around a year ago, and then it kept trending up this way as well. And AMD is very similar in that manner. So this is the crash here in 2019 or 2018, late 2018, and so I think that this continues. You go and look at a 30-minute chart, and you're just going to watch and look for dips here. There's really nice consolidation up in here around the 45, 47 range. And so all you're going to do, this is really simple. The stock market, I'm telling you, there hasn't been a better time to be bullish in the stock market right now and just kind of riding this wave. I don't know how long this is going to continue to go straight up, but what I've been telling folks within my mentorship and just within the WeTrade HQ community is that just ride the wave for now. Why bother worrying about the sky's falling and all of that stuff when you could just be riding this bull wave and just cashing in the dough. Nobody's at least nobody on this channel is telling you to just buy Apple way up at the top and just hope and pray that it continues to go. No, you're making educated decisions on where these dips are going to be and getting out at the appropriate times, letting your winners win, letting your winners run, and then cutting your losses short. But again, for something like AMD, this is going to be one that you're going to want to pay attention to the S&P 500, how that's reacting, and then you're going to react as far as AMD is concerned and trade this accordingly. So looking at this chart, you can see that there's a pretty decent support level around 45, around 45.80. And that's been kind of the sweet spot for AMD over the last several trading days. I've been buying back in at 45.80, and then riding it back up, getting out, coming back down at 45.80, and then just really. This is another one. You can just really just buy the dip and then and seeing where it goes. It really has just been super easy to identify these supports and resistances. Get in, and your stops never trip, because as soon as you get in on that support, it just goes straight up after that. It's just been really, really easy to make these trades over the last several, 2-3 weeks. And so AMD is no exception to that. And so going into what I would consider a short week, because, the stock market is going to be closed right in the middle of it, I would just do that. Do the exact same thing. Watch the market, look for stocks that follow the market, and then trade them accordingly. And then we can get into looking at things that are going to be a little bit more volatile, or maybe a little bit more have a little bit more higher potential or better opportunities after this week, because there really isn't any earnings this week. A lot of the earnings start next week, so there really isn't going to be a whole lot moving around. At least I wouldn't imagine, barring some crazy, global catalyst or something like that, that would really kind of, have me looking one way or the other when it comes to any kind of specific stocks that I would be watching. So these are going to be the ones that I watch for on the big boards. And then moving on to penny stocks. So if you guys are curious about penny stocks, which ones to get into, this is on the OTC. It's ABCE. ABCE is going to be one that I'm watching for. This is going to be a little bit of a wild card. So as you guys can see, on Friday, it went up 41%. It went up 41%. And, they are pretty much done diluting for now. Just monitoring this one and kind of seeing the overall volume and how the price action was reacting. So this is on the daily chart. You can kind of see how this was had a really nice move up after dilution was over and done with. You can kind of look at this on the 30-minute chart and really kind of see how this has moved up. Now, this doesn't look quite as pretty as some of the big board stocks we were just watching, but yet again, this is the OTC, this is penny stocks. So it's a little bit different. You're going to trade these a little bit more differently. But what I would look for on ABCE, as long as dilution stays away, and there's no reason really kind of to believe, based off of looking at these filings, that they're going to be converting anytime relatively soon, I would look for a move up above 002. So if you're looking at the chart here, this is on the daily chart, and 002 seems to be that next area of resistance. So if I move this resistance point up to 002, this is right here, you can kind of see where it used to be a pretty decent support, which we know about old supports becoming new resistances. So that's why we're looking at 002 right now to be that next area where it could potentially break out of. So that's what I'm looking at on ABCE moving into next week, to see if you can kind of hop up over that 002 area. But again, this is kind of like that one of those wild cards that I kind of bring to the table every once in a while, because you just don't know when dilution is going to start back up again. So what I would suggest that you do is, if get yourself familiar with level 2. If you don't know what level 2 is, then this is probably not going to be a stock for you. You don't necessarily have to rely on level 2 not nearly as much when you're trading bigger board stocks. You're looking more towards like price action and that sort of thing. But level 2 is going to be something that's really going to come in handy when you're trading OTC stocks in particular, because that's going to allow you to see whether or not there's going to be dilution occurring actively. If you can see those known dilutive market makers sitting at the top of the box on your level 2, that's when you're going to be able to see if they're diluting or not, especially if they're going to be hiding their share sizes. And obviously, if you can see T trades at the end of the day, it's going to let you know that, yes, now they are continuing to actively dilute. But if they are not diluting come Monday and you see a lot of volume continuing to roll into this thing, I think that ABCE definitely has potential for a nice pop. Could give you a nice little 100%, 200%, maybe even more, as long as that dilution stays away. We'll see where this goes. But again, the volume is king, right? So we got to see that dollar volume rolling in. We got to see people buying this up. But I think what attracts a lot of people to things like ABCE is the fact that, dilution has dried up. Shares aren't being dumped into this stock. And so that in and of itself can be a catalyst, even if there is no real news that comes out on it. So that's the fourth one. And then the last and final one's going to be OWCP. So OWCP has been an interesting one over the last, I would say, several days. OWCP, especially just before Christmas last week. This is one where one of our folks, Roy, some people know him as R-Star, brought this to the table within our mentorship. And, you know, I thought this was interesting. There's a lot of things going on with OWCP. One thing in particular was that they canceled, or they voted against doing a reverse split. So if you can see here, to pull this up on one of their filings, this is one of their latest filings. So if you're on OTC Markets, you can go to disclosures. You can see that they had a recent 8K, and they voted against a reverse split. If you guys aren't familiar with what a reverse split is, it's just really not a good catalyst for any stock in particular, but basically shrinks your piece of the pie when it comes to your position. So if you're currently holding something like OWCP, they go through a reverse split. That means the position that you're holding is going to be significantly valued less than it was before, because you're not holding nearly as many shares, and there is less pieces of the pie to go around. So, and again, that's just a very basic explanation, but for the lack of for the sake of time, you know, again, they voted against this. So you can see 118,000 against, votes for, was not adequate enough to put forward the reverse split. So that's why OWCP has been moving very well over the last several days. And I'm looking for a nice area of consolidation for OWCP. So I think that it could definitely consolidate here around 0.3 and 0.4 cents. So just be on the lookout for that. Maybe it comes back and dips down and allows you to get some in the high 2-cent area. But this will be one that I wouldn't just like go all in on, and I wouldn't suggest anybody goes all in on any OTC stock. Work yourself into a position. You know, take a small, whatever you were thinking about taking a position on, take a partial, and then continue to add partial amounts of your overall position size that you were planning on taking as far as capital is concerned, as you know, this starts to develop. And then that way it allows you to manage your risk. So if you only put in part of what you were planning on putting in, then it allows you to kind of take a step back and say, okay, do I really want to put the rest of my capital into something like OWCP, especially if it starts going, you know, the wrong way? And so that's where, you know, a lot of us over-the-counter penny stock traders, you know, develop our strategies is that we're not going to take our entire position size, or the entire capital amount that we wanted to put into it, and throwing it all out at once. You just work yourself in, get yourself a starter position, work your way in as far as the position is concerned, and depending on how the market reacts to that particular stock that you see value in, you know, it will, you know, dictate how you accumulate that position. So that's how you would handle that. That's how I would handle ABCE. That's how I would handle OWCP. That's how I would handle any over-the-counter penny stock that comes my way. So let me go ahead and check in with you guys. That is all of the top 5 stocks that I'm watching this week. I will be coming out with a video on top stocks to watch for 2020, the entire year. Things that you would want to invest in, maybe long-term. If you have a longer-term investment pool, these are going to be those ones that I would probably do. So be on the lookout for that. Wednesday is when that video will be coming out. But for just this week, these are the stocks that I would be watching and looking to trade. So let me check in with you guys. Greg says, how is INKW looking for 2020? I don't know. INKW is just, who knows? It's been a frustrating one for sure. Hope says, I made good money on ABCE on Friday. Yes, many of our folks within the mentorship did. I think we can look for a nice continuation on that. ARST looks like it could be the bottom. Alan, that's one that I'm not really all that confident on, just because of volume. If volume starts coming back in ARST, for sure. But that's going to be one that I would look for and wait to see if volume is going to be coming back in on that one. And so, bailed right after news. Yeah, about REAC merger announced Friday. REAC, we can take a look at that one. Let me see here, Driver Dave. So let's go back to sharing my screen here. REAC, let's look this up. So I know that one is an over-the-counter penny stock. We can kind of take a look and see where we're at here. So looking at this right on the surface, Looks as if the share structure is relatively decent. I really like this. What I would be concerned with is this here. If that's exactly what the float is, then that's something that would be really concerning. So let's go ahead and look at REAC as far as the chart is concerned and see how liquid this has been trading. It wouldn't necessarily matter if there's going to be a merger or not. Let's see what's going on in the disclosures here. So it looks like they had an 8K that came out on the 27th, which was on Friday. And you'd be right. So on December 26th, we entered into a definitive agreement plan of merger reorganization for Florida Beauty Express. I'd have to do some more digging on what this company that's merging into it, but we all know that companies that do this are definitely good. Mergers are like one of the top catalysts in the OTC. So, but let's see if I can get this chart pulled up here. And yeah, this is really, really illiquid. So if you can see this is on the daily chart here, Driver Dave. So what I would suggest is you should be very, very cautious about this. You can see, look at this, 4,000, 25% move on Friday, right? And maybe it continues to move. But 4,000, 25% move is insane. And it was probably on very, very little dollar volume. So you can see on Friday, there was hardly any volume to speak of at all. So these are the ones you're going to have to be cautious of and really kind of be careful with, because you could get stuck in something like this very, very easily because of the share structure being the way it is. And if you look at this, you can see that, 200 million AS, which really isn't that big of a deal. This already would be a small share structure that I would tell people to be very cautious of as far as the OS is concerned. And I know that this number is way out of date, as we can see that March 2019 is the last time the float was actually updated. But looking at the chart, there's no reason to believe that it's probably not too far off from this number. So what you're going to run into is that even if you're able to at least get your order filled on REAC, it's going to be even harder for you to get your order, your position back out of it. Really, really tough. Not something that I would suggest anybody really trade, period. And especially if you're a newer trader, this would be one that I would pretty much stay away from, because the spread's going to be all over the place. You see right now that it's, I'm just looking at it right now. So the spread on Friday, bid price is at 35 cents. Ask price is at 97 cents. That's over a 100% spread. So, if somebody comes down and whacks the bid at 35 cents, that's a 60% drop just from one trade. And that's how crazy and scary it can get. So maybe it moves, maybe it doesn't, but this is something that would be extremely, extremely risky for you to do. So 100% lotto play if this is going to be something that you were really wanting to get into. Would not bet the farm on REAC. Okay, so moving forward, looking at some other ones we got here. Yeah, Alan, super thin isn't the word for it. Alrighty. Verb is going to make a huge comeback. I guess we'll see. HM. OS 23 million shares, but again, it just comes down to what kind of volume is actually going to come into this thing. So Zshan RAD was definitely a winner for me as well. RAD, so we can look at that one real quick, and I'll make that my last one. Andrew, you know what? I'll make OPTI my last one. I'm sorry. Check out T for Andrew. So we'll go out and check out T first. Sorry, let me back up. So T, we'll check out T, and then we'll check out RAD and OPTI. Okay, so let's go check out T. So I'll pull that up. AT&T. Get this pulled up here. Hopefully the internet still cooperates. I think it is. All right, so looking at Target here, or not Target. I was thinking TGT, but we look at T, it's AT&T. Looks like the overall sentiment for WeTrade HQ users is that it is a buy. And looking at the daily, or this is the 1 minute chart. Let's pull it out to the daily chart. Looking at the daily chart, it actually looks like it could definitely make a really nice bullish move. So look at this trend. Remember I was telling you guys earlier, I don't know how early you've been in, Andrew, but I think you were here since the beginning. But this is a really, really nice looking trend. What I would look for on AT&T, if you're not in it already, is for a breakout above this previous high. So if you can get it back up over 39.75 and watch this breakout above that, definitely would have a pretty good likelihood of continuing to break out. If you're looking to take a position on this one and waiting for some sort of pullback, I would say, you know, maybe somewhere around $39 flat, or maybe as it comes back down to even all the way down to $37 flats. So you could see 37 bucks right here. This is that $37 line. Well, I got it down a little bit lower than that, but $37, you can kind of see where this is at and how this kind of looks like a really decent support for it. But since then, it's been kind of moving up pretty well on the daily chart. If we go back out to a 30-minute, you can see the trend looks pretty much the same. That it's been following this trend very well. Really nice looking dips here. So really good opportunities that AT&T has allowed. And so what I would look for here is just a continuation. You know, look for this to continue above its previous highs and see if it can continue there. Usually when you see a breakout above a previous high, there's a really pretty strong likelihood that it could continue. So that's what I would be looking for as far as AT&T is concerned. If it cannot break that previous high, then chances are it could get rejected and fall back down to a previous support. So that's what I would look for. And again, I would say maybe if it gets rejected all the way up here, look for it to perhaps come down to around $39 flat. And if it continues to break down from there, really kind of, for me, looking at the daily chart, and even if we come back out to a 4-hour chart, you could really see that that $37 mark is a really sweet spot for it as far as support's concerned. Really strong area of support is right around $37. So that's what I would be looking for if indeed it gets rejected and there is some sort of pullback. That's where I'd be hopping in on AT&T. All right. Yeah, Bob, what's up with you, man? Anyways, OPTI. This has been one that's been on a lot of people's radars over some time. This made Stockwatch Sunday 1 week, and then it didn't do so hot afterwards. So let's go back to I think there's an OPTI that's also a cryptocurrency that, in fact, was not a cryptocurrency anymore. So that's what will happen sometimes. So let's see, OPTI. OPTI, you're looking at the share structure here. This is one that really kind of scared a lot of people away when they increased the AS to 900 million. This is one that people weren't big fans of, but it had a lot to do with the lockup period, or the lockup of shares. So OPTI is going to be one that I would express a lot of caution with. You know, until we see some sort of confirmation that they're not going to just use this massive AS raise to dilute on people, that's what I would be strongly cautious of. OPTI has this habit, right, of having a nice little run up and then diluting right into that run. And you can kind of see this. We come out on the daily chart, that's all it's ever done. It runs it all the way up and then just dilutes it to hell. And then it starts to run it up a little bit more and then just dilutes it to hell. And then it just, slow, painful deaths after that. Another run up and then it just dies again. So could it happen? Could OPTI be a huge, massive runner? Of course it can. But given its history, I'm a little bit leery on trusting it just because of what I've seen in the past from OPTI and this huge AS raise here to 900 million shares. Again, there have been arguments as to whether or not this is going to be used to dilute, but when people see a massive AS raise like that, that's the first thing they go to. So that's one reason why I would say just be cautious with it and just understand the risk going into OPTI that could potentially happen, and maybe this results in a reverse split. Who knows? I mean, I'm not saying that's going to happen, but that's just one thing that you got to think about. You have to keep in the back of your mind whenever you see something like this happen. So let's check in and do one last one. Okay, let's see here. MIK may be nice again tomorrow. So, yeah, that could be going RAD. So, yeah, RAD was one that I traded, which was Rite Aid. If you guys saw this one, Rite Aid's had a lot of positive catalysts, had good earnings. CEO came out with a new CEO, I believe, on RAD. But this has been one. Let me come back out to the 5-minute chart. I want to look at the 5-minute chart. This has been one that's done very, very well. I actually swung this overnight from Thursday night into Friday. I had a $6,000 trade on this one. Fantastic trade on Rite Aid. Was super happy with how this all turned out. And so can it continue from here? Honestly, I think that we're getting ready to get onto the downtrend of Rite Aid. So I think that right now, if anything, it's going to try to fill this gap here at 1914. So I bought into this very low $18 range, and then sold it pretty much at the very top, scaled my way out, and sold most of it into the $23 range. But now that it's basically coming back down, looks like momentum's starting to die off on this one. I would look for it to try to fill this gap down to 1930 and see if it can continue, see if it can bounce from there. And if it can't, then you're going to have to look to see if it's going to come back down to and fill yet another gap at 1662. So that would be how I would play Rite Aid. But for me personally, I think I'm probably just done with it. Unless for some reason it has another great run in it. This has been a massive multi-day runner, right? Since, well before Christmas, this has continued to, impress and run and run and run and run. And so I think that now we're finally starting getting into, you can see towards the end of the day on Friday, it's starting to kind of, turn itself back down. Do I think it's going to come all the way back down to the $8 range? No. I think it's definitely likes being into the $20 range, but I think that we'll see some sort of pullback and see some of these gaps get filled before it then continues on. So I'm probably done trading it for now, unless something, like I said, crazy comes out that would make me want to get back in. But, if you're looking to maybe hop in on some dips, then that's how I would play it. Look for it to fill the gap around 1930, and then look for it to fill it again at 1660 if it can't hold this 1930 support. All right. All right, guys. Well, that's going to do it for me. I appreciate you guys tuning in today and showing me some love and support. It was really great to see you guys again. Really always love having you, just be a part of Stock Watch Sunday. It's a lot of fun, and I really do like breaking these down for you guys. Hopefully, you got some value out of this. If you did, certainly would appreciate a thumbs up and a subscription if you want to see more Stock Watch Sundays such as this. And that's going to do it for me, guys. If you want to check out WeTradeHQ, go to WeTradeHQ.com. The links are down in the description. It's absolutely free to join and use our free tools and resources to help you become a better trader. All right. And then if you're interested in checking out the mentorships as well, those links are down there too. It's really inexpensive. I mean, you combine all of the live streaming services that are out there now, and it's still cheaper than those, and it pays for itself every single month. So why wouldn't you? Go check it out. Links are in the description. That's going to do it for me, guys. Thank you so much for tuning in. As always, I will see you all before the bell, and B. Smith is out. Have a good night.